All right, we've dealt a lot with the politics in the last 5 minutes. Let's move to the markets. Still not much price movement. I do have the Nasdaq up, 11 points, Dow's down 30, S&P dead flat. Michael Lee is here. Actually, Michael Lee, not only is he here, he's sitting next to me in New York. We've not met before, have we?
Not in person, Stuart.
Not face to face.
Oh, really?
Well, watch out, son, because you're with me now. All right, if the Fed softens, does the market rally?
Massively.
Yeah?
Massively.
Yes. Will the Fed soften?
So that's the million-dollar question. Right now, the bond market is saying no. And what you're seeing in Fed fund futures is that instead of stopping at 3.5% and potentially cutting in the first quarter or second quarter of next year, the bond market is saying that there's going to be a hike from 3.5 to 3.75 and maybe not a cut until the end of 23, till the beginning of 24. This started over the last week, and that's why we've had a sell-off over the last week.
Well, what would that do to stocks?
So it's already been priced in. It's
all in there?
Yeah, so that's the 3 or 4% we've seen come off over the last week.
Okay, so we've got the rally. Where to from here?
So if the Fed reverses course and they're hard on a pivot as economic data continues to fall apart, you could see the market get 4,300, 4,400 on the S&P 500. So
up a little bit from where it is now.
Another 5 to 10% up from here, substantially.
Okay, here's my question, and I've asked you this before and other folks before. What's wrong with me buying now a 2-year Treasury security that would yield me 3.3%? And if I hold it to maturity, that is, hold it for 2 years, I get my 3.3% both years, I don't lose any capital, get my $100 back for each one that I buy, and I've got no risk, and I've got a tax break. What's wrong with that?
Nothing wrong with that, especially if you have cash sitting on the sidelines. The only thing is maybe in a month or two from now, you might be able to buy it at 3.5 or 3.75.
That's the only problem? But I'm still safe on it. Look at that. There's the 2-year Treasury, 3.36. That ain't bad. You know?
Especially versus zero or negative 5 or 6% inflation adjusted of cash sitting on the sidelines. It's not a bad trade.
So here's what I'm doing. I'm staying with my big name stocks. That would be Blackstone and Microsoft. And any fresh money goes into 2-year bonds or something like that where I get a 3% yield and no risk. Where am I going wrong?
You're not. That's a great strategy.
Oh, you can come back anytime you like, son. Seriously, Mike, thanks very much for being here. We do appreciate it. Thank you, sir. Lauren's looking at the movers.